Today, I want to give you a breakdown on current home interest rates and how they can affect your home buying power. So, some of you may ask, well, I got approved to buy a home at a certain price around last year, but I couldn't find anything. So I kept looking, and now I found the perfect home at that price I'm ready to buy, only to find out that your mortgage lender is no longer approving you for that price. Well, the interest rates could be to blame, and I'm going to give you a breakdown on exactly how that works. Okay, so I understand that some of you may be in markets where home prices are much larger than this, and some of you where they're substantially lower. However, to have a happy median, I'm just going to say that where you're located, you got approved for a home at $200,000, which is about what they're priced in your area, okay? You saved up 20% of that purchase price because you want to do a conventional 30-year fixed term. So you saved up 20% of the purchase price, which is now $40,000, to go towards this home purchase. Now, when you initially got approved, it was a little over a year ago in 2021, when interest rates were about 3.75%. Taxes are also included in this payment, and we're going to say in this area, the yearly taxes are going to be $1,200. Homeowner's insurance, something that you're going to be required to have whenever you're mortgaging this home. And we're going to say it's at $2,600 for the year. Now, if you're not familiar with HOA fees, basically certain areas have different covenants and restrictions, and you'll have to pay this fee either quarterly, yearly, monthly, it just depends. But we're going to say that the neighborhood where this home is located does not have an HOA. So that fee is not included that you have to worry about. You also don't have to worry about the mortgage insurance because you put down 20%. Now, each month, your payment is going to come in at $1,048.39. Because of this interest rate and the 30-year term, the price doesn't change. However, over the course of your loan, you're going to end up paying your lender much more than the purchase price of the home, and you're going to end up paying them over 30 years, assuming that you don't pay more towards the principal at any time over this to pay it off a little bit quicker. You're going to end up paying them $419,420.16. Now, let's talk about the current market conditions as it relates to the interest rates in 2023. And this can be applicable to any year as long as you just understand what the current interest rates are. So I'm going to transition over to this side and show you what's changed and what's not going to change, okay? So we're going to say that the price of the home is still $200,000. You didn't spend your down payment money, so you still have $40,000 to go towards the price of the home. And because you're still putting down that 20%, remember, you're not going to pay the mortgage interest. So that's still going to be zero. No HOA fees, still zero. The insurance on the home is still going to be at $2,600. Now, your taxes, we're going to say they didn't go up either, okay? So we're looking at $1,200 for the yearly taxes. Still going to do that 30-year fixed term. So nothing changes there. But the interest rate now, we're going to say, is at 7%. Now you might be thinking, okay, well, 4, 5, 6, 7, it's just a few percentage points. How big of a difference can it make? Well, the answer is a lot. So remember, your mortgage lender was trusting you and you got pre-approved to pay them a little over $1,000 a month. But now, with the current rate, you're actually going to end up paying them over $300 more a month. And the actual payment's going to come in at $1,381.15. So because you might have been on that borderline, you can afford to pay a little over $1,000 for this home. Well, now they're looking at you and saying, well, now you got to come out with over $300 more each month, and we just can't take that risk on you. So that might be why you get denied once it comes down to that, okay? Now remember, you're actually paying them over 30 years a lot more than the price of the home, okay? So remember, you're paying over $400,000, double the price of the home if you don't pay any extra towards the principal over the course of 30 years. But over here now with the 7% interest rate, you're actually going to end up paying them a lot more. And we're just going to break this down here, and it's going to come in at $537,000. Excuse me, you're probably not going to be able to read that. So $537,214.25. So look, over the course of 30 years, exactly how much you end up paying them. Now, this isn't a deal breaker if you're wanting to buy a home. And let me explain why. Okay, so what do I mean about it not being a deal breaker? Well, if you're really wanting the home and you're dead set on getting it and you're not approved, you can always try some other avenues of getting approved for this home, negotiating the price down, upping your down payment, changing the terms of your loan, things like that. But let's say that you do still get approved, you just don't like the difference in the home price, but you love this home. Now, remember that you're not married to this interest rate. So I may have scared some of you off by saying it's a 30-year term, and it is. However, you can always refinance if the interest rates go back down. And interest rates are always going up and down, so that's never a constant. What is a constant is the home that you're living in and the term of the loan. So if you choose to remain under this 30-year term, it's going to stay that interest rate, okay? But again, people say, you're married to the home, you're not married to that interest rate. And what I mean by that is if you wait to buy this house for the interest rates to go back down, this home may be gone, all right? But if you're willing to go ahead and pay the extra higher interest rate to get that home now, if you wait a couple years, let's say interest rates go back down, well, you can always refinance that loan. And basically, it's this same process. You're going to kind of refinance to a whole nother 30-year term, but under what the current interest rate that you get approved at is, and then that'll lower your payment back down, but yet you're still in the home that you wanted to be in the first place. And if you spent this long with me, be sure to subscribe so that you can get some more financial videos similar to this. And I thank you for your time.